Today, we delve into the current situation of SoFi, covering recent data points, short interest, and future opportunities for the company.
Hello, everyone.
Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. We observed a 1.85% decline in SoFi's stock price, a trend that persisted throughout the day. During this period, shorts were returning some shares. We'll break down these details shortly. The day's trading volume was 22.4 million shares, compared to the 30.7 million average. Transactions over $100,000 on the secondary market were fairly balanced between buys and sells. This suggests that the majority of the volume was driven by shorting and algorithmic trading. Interestingly, there were no new official updates from SoFi, no SEC filings, or significant announcements. The media coverage about SoFi has been predominantly negative. A recent article from Motley Fool warned against buying SoFi stock, citing key risks. This is surprising given that just a few days earlier, Motley Fool had named SoFi the safest bank for July 2024. This inconsistency highlights the click-driven nature of such articles. Despite the negative press, SoFi has a promising opportunity in the near future. One key development is Chase's plan to start charging for checking accounts, which could drive consumers to seek alternatives. This opens a significant window for SoFi to attract new members. It's unlikely that all 86 million affected individuals will switch to SoFi, but a substantial percentage might, offering SoFi a chance to shine. Regarding short interest, today's shorts returned 2.81 million shares, mainly during the power hour. This might be related to Powell's speech tomorrow, possibly anticipating positive reactions. Currently, 17.9% of the free float is shorted, amounting to 185.81 million shares. The utilization rate stands at 69.03, and the short score is 74.73, indicating a high likelihood of a squeeze. The cost to borrow average is 0.91%, consistent with Friday's rate. The cost to borrow minimum has normalized after a brief period where some brokers incentivized shorting. There haven't been new analyst ratings today. The last rating was issued 6 days ago with a $10 price target by Needham's Kyle, who has a 44% success rate. Historically, analysts issue ratings about 2 weeks before SoFi's earnings, so we might see new ratings soon, especially with the upcoming CPI release. Looking at options, 2.8 million were in calls and 1.76 million in puts. The sentiment was 54% bearish, suggesting an expectation of a pullback. The call options show a consensus for prices above $6.50, while put options indicate a consensus below $6.50, even down to $6. For the July 12th expiry, there are significant open interests at strike prices of $6.50, $7, and $7.50, indicating potential resistance levels. When comparing SoFi to the S&P 500, SoFi's performance appears lackluster. Over the past year, the S&P 500 is up 26%, while SoFi has seen a 33% decline. Even over 6 months, the S&P is up 17%, while SoFi is down 21%. This suggests that investors are seeking better opportunities elsewhere despite SoFi's strong earnings. Currently, SoFi is trading at $6.35, moving within a consolidation range. The support level is around $6.28, and the resistance level is $6.75. On a 4-hour chart, we see minor support at $6.33 and resistance at $6.48. As long as SoFi stays above $6.20, it remains in a consolidation phase. However, the broader market is experiencing upward momentum, which contrasts with SoFi's current price action. Optimism around potential rate cuts in September is driving the broader market. For the September 18th meeting, there is a 70.8% chance of a 25 basis point cut. This expectation is boosting growth stocks, including SoFi. Despite this, predicting SoFi's performance remains challenging due to its volatile nature. However, an increasing number of retail investors have been buying into SoFi recently, which could be a positive indicator. In summary, while SoFi faces negative media coverage and challenging price action, It has significant opportunities, particularly with Chase's new fee structure potentially driving new members to SoFi. The short interest data, analyst ratings, and options market sentiment provide a mixed outlook. The potential rate cuts in September could serve as a catalyst for growth. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.